Good morning, good morning, good morning. It's another day, Wednesday, August 17th, 2022, and I am Kenny Polkar, your host of the party, and here's what you need to know. Yes, Walmart and Home Depot, they beat everywhere, up and down and in and out, and investors went crazy for those stocks as well as retail in general. Oil and gold continue to churn in line. Treasury yields rise, right, as prices decline. Housing starts, talk about declining, fell by 9%, reiterating the trend that we see in a weaker housing market. Capacity utilization suggests inflation might be ramping up. The FOMC minutes due out at 2 p.m. today, so the markets will await that. And what are we having for dinner? We're going to have the roasted cherry tomato risotto. Delish. Housing starts collapsed by 9%. Versus the expected negative 2.1%. Recall that the NAHB index came in at 49 on Monday, the lowest it's been since the great financial crisis. Building permits weak at 1.3%, down 1.3%, while industrial production did rise by an expected 0.6%, and that's good. Capacity utilization, though, came in at 80.3%, more than the expected 80.2%, and remember, anything north of 80 is considered inflationary. Treasury yields rose but remain inverted and will likely remain that way for the foreseeable future, so you can do what you want with that information. Oil, which breached support on Monday at 89.45, remains just below that trend line at 86.51. On Monday, I said that if we breach support, then it's possible to see oil trade down to 84.5-ish, a level last seen in February before Vlad invaded Ukraine. Now look, there's conflicting perspectives on why we're seeing this weakness in oil. The most common is clearly demand destruction caused by the coming recession as well as a weakening Chinese economy, China being the largest importer of oil. There's also the idea that the Saudis are now ready to ramp up production, and that's all adding to the supply angst. In any event, year-end targets are all over the place, ranging from $60 to $150 plus, right? Our friends at Goldman at the high end of that range. The bet is now that we're going to see $60 before we see $100. Now that's an interesting bet. Gold holding the line at $17.87 an ounce. Let's just see what happens after today's FOMC minutes are released at 2 p.m. Will the gold bugs react to what we learn, if we learn anything new? It's kind of in a funny place right now, gold, right? It's right below the trendline support, but it's holding tight, unsure of what's next. Maybe today will be the deciding factor. Stocks had a mixed reaction. By the end of the day, the Dow advanced 240 points. The S&P rose by 8, the NASDAQ lost 25, the Russell gave back 1, and the transports rose by 112. Walmart and Home Depot both killed it, beating expectations and leaving investors wanting more. Recall, it would have been a disaster if Walmart missed the slashed expectations, the slashed estimates. The stock gained 5% on the day yesterday. Home Depot also rewarded stockholders by beating their estimates, and that stock rose by 4%. Both names are Dow members, and that's what helped the Dow rise by 240 points. There were big moves in both those names. And the retail sector was on fire. The retail ETF XRT was hot, rising 4.2% as well. And think of the other names in the group. Target was up 3.8, Kohl's up 6.5, Costco up 1.2, Dollar Gen up 1.1. The high-end retail is up as well. JW Nordstrom's up 7%, Macy's up 6, Dillard's up 3.7, Tapestry up 3.5. Now look at the consumer sector. Both consumer discretionary, the XLY was up 1%, and the XLP up 1%, which is odd. That speaks to two things. One, the staples remain a defensive play, right? It's flat on the year, which is a win. While the discretionary sector tells you investors went shopping for bargains on the back of the Walmart and Home Depot reports, right? That ETF, the XLY, is down 16% in the year, rallying higher after being down 34% in June. Investors see it as a sector of opportunity if they believe that the coming recession will be muted and they believe the worst is over. They can pick up what appear to be bargains. But if the coming recession is longer and deeper, discretionary spending will be the first thing that gets cut, and discretionary sector will come under pressure again. So just go in with your eyes open. I'm not saying stay away, just go in with your eyes open. Tech, healthcare, energy, and real estate all ended the day a little bit lower, while industrials, utilities, financials, communications, and basic materials ended the day slightly higher. Nothing dramatic to report in either direction. This morning we heard from Lowe's, and they beat and reiterated that it expects to see fiscal year earnings at $13.10 to $13.60 a share. They also expect to see 2023 expected sales of 97 and 99 billion. That stock's trading higher in the pre-market, up 3% or $6.80 a share to about $221. Target, on the other hand, was due out as well. And remember, like Walmart, Target pre-announced and they warned and they lowered their estimates. And guess what? They missed even the lowered estimates. How dumb is that? They had the chance to rewrite the playbook like Walmart did, and they still missed it. That's almost laughable, right? They're taking a big hit and trying to unload all that unwanted inventory that they piled on during COVID, I guess. Traders taking it down, then up, and then down again. Currently, the stock was trading down 1% in the pre-market. TJ Maxx is due out also before the opening. They haven't come out yet, but they're due out at any moment. Economic data today is all about the consumer and retail sales. Advanced retail sales month over month are expected to be up 0.1%, while retail sales ex autos and gas is expected to be up 0.4%. And then at 2 p.m., we're going to get hit with the latest Fed minutes. Lots of speculation about what it's going to reveal. Will they show a Fed on the edge of a pivot? Will they show the Fed committed to hiking rates aggressively to tame inflation? Or will the minutes leave it vague, using language that can be interpreted in a number of ways? Will we see evidence of quantitative tightening? Clearly, the recent market action is expecting a pivot off of 75 basis points to something different. Think 50 basis points. That would suggest a softening of thought and would explain the recent double-digit rally in stocks. This is where I say be careful because the messages remain mixed at best. Look, I suspect that the minutes are going to have a hawkish tone. I also suspect we're going to find out that there was a lot of conversation in July about should we raise rates by 100 basis points, which ended up being only 75, right? I also expect the tone is going to remain elevated as inflation is their focus, and we heard that from 5 different Fed mouthpieces in the past 2 weeks. But let's see. Tomorrow we're going to hear from Kansas City Esther George and Minneapolis's Neely Kashkari. So that's going to be interesting to see what they have to say after today's minutes. This morning, U.S. futures are down. Dow down 150, S&P's down 30, NASDAQ down 110, the Russell down by 14. No specific reason other than today's economic data and the Fed minutes. A pullback in the market would not be out of line after the 16% rise in the S&P and the 18% rise in the NASDAQ over the past 3 or 4 weeks, all as investors expect the Fed to pivot, which I do not. In Europe, stocks are down. The energy crisis across the zone is getting worse. Natural gas futures jumping by 5%, and the inflation rate in the UK jumped to 10.1%, up from the expected increase of 9.8%. So inflation is not coming under control in the UK, nor in Europe as a whole. So expect rates to continue to move higher at the next Bank of England and the ECB meetings. At 7 o'clock this morning, European stocks are off between 0.5% and 0.75%. Nothing really big, but they are weaker. The S&P ended the day at 43.05, up 8 points and piercing the next century mark, right? We traded as high as 43.25, just 10 points shy of the overhead resistance. Futures actions this morning suggest we're going to back off a bit and digest and wait for the Fed minutes. I think this rally is a bit long in the tooth, but that doesn't mean it can't go higher. In any event, I think we're in for some more chop in the weeks ahead. Remember, September and October tend to be volatile months anyway, and the final 2 weeks of August tend to be on lower volumes, causing exaggerated moves in either direction, right? I think we still remain in the 41.15, 43.35 trading range, clearly kissing right at the top. So keep your eyes peeled. So what are we having for dinner tonight? We're having the roasted cherry tomato risotto, right? This is easy to make. It's different. You can use it as a main dish, as a side dish, as an appetizer. For this, you need 3 cups of our arborio rice, 1 stick of butter, olive oil, 1 shallot, 1 sweet onion chopped, 3 cloves of garlic chopped, some fresh basil, which you've chopped up as well, salt and pepper, a 1/2 cup of dry white wine, Pinot Grigio works well, 10 cups of chicken broth hot, and some fresh grated Parmigiana cheese, with that as much as you want. Preheat your oven at 350 degrees. Clean and have the cherry tomatoes, right? Toss them in some olive oil, garlic, basil, salt, and pepper. Not a lot, just kind of get them coated a little bit. Spread them out on a baking sheet lined with parchment paper. Stick them in the hot oven for 25 minutes. While this is happening, take a large, heavy-bottom pot that you're going to make your risotto in, melt the butter, add a splash of olive oil, and put that over medium heat. When the butter is all melted, add in the chopped shallots and the onions, saute it around for, 2 to 5 minutes or so till it's translucent. You know the deal. You know the deal. You want the onions to get soft and translucent. Now you're going to add the rice. You're going to stir the rice to coat it in the butter and oil and the onions and shallots, and continue to saute it for 3 or 4 minutes. You want the rice to be coated. You want to kind of start to get a little bit brown. Now you're going to add the white wine and then stir it. You have to sit there and stir it until the wine is completely absorbed. Stir until it's absorbed. Now, we're going to begin the process of making the risotto creamy. You're going to add 1 ladle of hot chicken broth at a time, and then you're going to stir it until the chicken broth gets absorbed. Then you're going to add another ladle. You're going to do that until you've used most of your broth, or when the rice is tender but not mushy. So you have to taste it to make sure it doesn't get mushy. You don't want mushy rice. At this time, when it's nice and al dente and not mushy, remove it from the heat. You're going to add 2 handfuls of grated Parmigiana cheese. You could add 3 if you want. And then you're going to take your roasted tomatoes, which you've now taken out of the oven, and you're going to fold those into the risotto, right? So put it in, fold it in, mix it all up. You can add a little bit more cheese if you want. It's nice and hot. The cheese should get all nice and melty and create this creamy risotto. You want to serve it immediately. In warm bowls if you're having it as, a main dish or as a first dish. If you're serving it kind of as a side dish, then put it in a nice big bowl and put it there on your table with whatever else you're serving. In any event, you can eat. It's a great dish to have. It's a different dish. It's a vegetarian dish. It's easy to make. And it's, summer cherry tomatoes are perfect. In any event, the morning is young. The day is young. There's going to be lots going on with the Fed today. Let's see what happens. Until tomorrow, take good care.